Hi, everyone, from the InvestorAi Academy. This is Shruti Bopaya here. We love to see you every week. We're back today with our InvestorAi specific webinars. The 2 Saturdays before this, we did the specials on our FTM portfolios, which is the follow the machine portfolios. But a lot of you wrote in and, asked us about, wanting this series back. And of course, this is the absolute one that we're going to run, going forward as well every Saturday. The good news is this is our 25th webinar in a row. So cheers to all of you as well. Many of you have actually shown up for every single one, and we want to thank you for that from all of us here. I'm going to, ask Akshay to come in. Akshaya Bhargava, our chairman and founder, who's been here, for 24 out of 25 of the webinars. So just one that Akshay wasn't in. So that's a great record, I would say. And Akshay, over to you. Please keep the questions coming, and the chat is open. And we look forward to talking about how to pick the right stocks, the best stocks, the good stocks. Akshay, over to you.
Great. Thank you, Shruti. And welcome, everyone. I can see some familiar names, which is wonderful to see. As Shruti said, this is our 25th webinar, and we have a special for you at the end. So please stay till the end. As Shruti said, I missed only one of these because I was on holiday. I will unfortunately miss next week because I'm going to be on holiday again. But other than that, I find these webinars really good because it tells me what all of you are thinking. A lot has happened. In the last 2 weeks, we've talked a lot about our FTM portfolios. Some of you may be familiar, and they have now gone live, and I will talk a little bit about it later. Today is a back to basics session, and where I'm going to be talking about how to find good stocks. Now, this is always a controversial subject, and it's important, but it's a very important thought process to go through when you're saying that when you're looking for good stocks or something. I'm going to talk about how do you find good stocks, but in reality, it's really back to basics. What I will do, I will give you some principles that I use, and these are just personal ones. Other people may have their own, and please share with us within the chat, and we will bring it up and share it with everybody as well. There is no magic formula. Everybody has developed their own way of working with the markets. But some of the basics are really important. So I will just share my thinking with you. I will then show you on InvestorAi how you can use some of these things. There are many features that are very valuable. Some people know them well. Some people don't know them so well. So I think it's worthwhile going through. Some of you are very, very familiar with InvestorAi, may already know, but bear with us because we are now sharing with lots of people. Let me just so what is a good stock? So finding good stocks is one question, but what is a good stock? And again, there is no consensus on something like this. Are these stocks that grow explosively? All these companies with good fundamentals, companies with good leadership, are they best in their sector? Are they stable? Do they have a strong balance sheet? Should they give a high dividend? Should they be a household name? As you can see, there are hundreds of questions, and different people define it differently. Just because everybody knows Tesla and Reliance doesn't mean they're good stocks. They could be, but it doesn't automatically make them good stocks. You have to find your own sort of way of thinking about it and then coming to it. So how do I think about it? Let me just, sorry, what did I do? So I look for 3 things. And let me just talk about them. So one is good fundamentals. So basically, it must be a good company. I will give you an example of what I consider a good fundamentals company. you could argue whether Zomato is a good company or not, but Zomato is definitely, going for a trend that is very, very, became very visible during pandemic. And I think is a trend that is here to stay. Similarly, if you look at Airbnb, I think, is a stock that has very good fundamentals. It's basically a great idea. It is executed beautifully, and I really like Brian Chesky. I think he's a great leader, great visionary, and very lots of things we admire. So I like Airbnb. Now take Robinhood. Some of you may have followed. So Robinhood recently IPO'd at $40. I know I'm not using an Indian example, but Robinhood is somewhat unique. So I would just want to talk about it. If you look at the details of Robinhood business, roughly 60% of their revenue comes from something called payment for order flow. So they take all the transactions that come in, they turn around, give it to Citadel. And Citadel pays them $400 million a quarter for that kind of thing. So they make a lot of money there. Now, payment for order flow, I personally believe is a bad thing. It creates conflicts of interest. It does not allow for best execution. It is such a temptation for front running. So I just think it's a bad thing in the industry. In UK, it is not. It is illegal. In America, I don't know how it is permitted, but it is permitted, and Robinhood is making a lot of money on it. So even though I think Robinhood is a good business, they have a fundamental flaw, and so for me, it is not a good company, a company that I would be interested in, because I believe it has an unsustainable business model. So, so you have to make your own judgment. Now, in order to make your own judgment, you have to have a good understanding. Now, nobody knows everything, and nobody is a professional analyst in the company. But you have to read about the stock. You have to make your own judgment. I made a judgment that Robinhood has an unsustainable business model. But there are enough people who are investing. So not everybody believes that. And I could be wrong, or they could be wrong. You don't know. But it is your understanding and your conviction that make all the difference. And finally, you must look for good timing. So when these three things come together, then it's a question of, what are you waiting for? Go buy it. Because you understand the company. The company has good fundamentals, and the price is right, and it's a good time to buy. This is a go signal for me. So how do we start in this process? Now, if you write it down, it's very simple. In practice, it is very, very hard to do. So find good companies, get comfortable with what they do, wait for the right time and buy, and wait for the right time and sell. Very easy to write, almost impossible to follow in practice. Now, InvestorAi can help you. It cannot do everything for you, but it can certainly help you with this process. And I will show you how InvestorAi can do that for you. Before I do that, I want to talk about something that many of you have heard me talk about many times, but that does not make it any less important. Your own judgment is very, very important. I believe that together with you and AI, you can become the Iron Man. You can fly, you can lift very heavy things, you can move very quickly, and basically you're invulnerable. But it needs both. If you look at Iron Man, Robert Downey Jr. needs the suit. Without him, the suit can do nothing. And without the suit, he can't do as much as he can otherwise. So it's the combination that makes it a superpower. And I think anybody can do that. So you have to think of InvestorAi not as, substituting your advisor, but giving you information that is very, very interesting and valuable for you, and letting you decide what you want to do. So your own involvement, your own judgment, your own thinking is hugely, hugely important. The second thing that is, I believe, is investors' biggest friend is time. Okay, so I looked up Live Mint. Okay, Sensex has grown 17% per annum for 40 years. Okay, this is the average. And then, you know, this is on LiveMint, so you can look at it. So if you had invested 1 lakh in 1980, that would be 5.4 crores today. Okay, this is just 1 lakh invested in January 1, 1980. Then don't touch it for 40 years. Okay, so you know, this is quite a stunning number. Now there are only mathematically there are only 2 components to that number. One is the 17% per annum. Well, there's a third component, which is 1 lakh, but ignoring that. One is 17%, the other is 40 years. Now, that 17% you can't control. It could be 12, it could be 11, it could be 20, it could be anything. But the 40 years you can. And for all of you who are 30 years old today, I would urge you to start now. It doesn't matter how much you spend or how much you invest. Start small, but please start. Please stay disciplined. Please keep investing. And by the time you are 60, 65, 70, you will have built a huge corpus that will supplement whatever other income you have generated. Okay? So think of investment as a long-term kind of thing. And long-term doesn't mean just invest and forget. That is a really stupid way of doing it. You can. I mean, if you put it in Sensex, it would have grown automatically. So I kind of take that back. But being an active investor has its own joys. It has its own fun. You learn a lot. You make like-minded friends. You'll get to understand the markets. So I am quite an advocate of staying involved. Don't make changes every other day or something like that. But anyway, the point here is that don't forget that time is very, very, very important. The compounding effect is one of the most powerful tailwinds that you can have. Even if you get 1-2% a month, it doesn't matter. If 2% compounding over a year will give you far more in excess, far more than 24%, which is a simple addition. So how can InvestorAI help you? I think there are 3 areas where I want to draw your attention to. One is all our major algos, which are value investing, Alpha 330, and swing trades. And I will show you all of them in a minute. The second is Play. Now, I think Play is an underutilized algo. It's very popular. A lot of people spend time on it, but I'm not sure if everybody knows how to use it well. So I'm going to spend a little time showing you that. The reason I say that is because, we have a technology tool that tells us, when you come to a page, what do you click on most? And on Play, I'm finding that there are 1 or 2 things that nobody is clicking on, or very few people are clicking on. And I think this is such a beautiful feature that I will show it to you. The third very important and a very, very useful feature is active monitoring. And it really does so much for you. And we have made changes to it over the last many weeks. So it is useful to come back and look at it. What is the new version of active monitoring doing at the moment? So these are 2 or 3 things I'll show you. Before I go further, I just want to talk a little bit about how our algos actually work. Okay, so their intention is to identify potential breakout ideas with the highest levels of accuracy. Okay, and the algorithms are nothing but machine learning models that use the best data sources in the world. Zahid, I can see you raised your hand. We don't do the raised hand thing here because we don't interrupt the flow for questions. Please post your question on the chat, and we will pick it up as soon as the presentation is over. All right. So these are machine learning models that use the best data sources in the world. They analyze over 600 pieces of data, both technical and fundamental, for every stock in every market, every day. Okay, so this is a huge amount of technology power that is at your disposal through the app. So just remember this. Now, before I go further, I want to just show a couple of things. I want to tell you a couple of things. It is very important that you maintain your balance as an investor. Okay, there will be times when you will make money. There will be times you will not make money, and I can guarantee both. I cannot tell you what will happen when, but they will happen. Okay, you cannot lose your balance. You have to keep calm, and you have to carry on. And this reminds me of a World War II poster that was issued by the Queen in England, and that is it's so appropriate. I had to put it up. Okay, and that's all it says. You will see this in tourist shops in London. You go to souvenir shops, they'll all have this poster saying "Keep calm and carry on." This is really what was emblematic of the British, national personality during World War II, which was a period of shortages and bombings and war and a lot of stress. Okay, so this is a very, very important message that I want to leave with you. The second thing I want to leave with you is how to think of our products. So all of you are familiar with InvestorAi, and some of you are familiar with FTM portfolios. And people have asked me, what do we use when? Does one substitute the other, and so on and so forth? So this is how we think about it. And if I think of all our customers, some have expertise and some don't have expertise. Some have time and some don't have time. And if I take a 2x2 grid of this nature, if you have the investment expertise and you have the time, InvestorAi is a perfect product for you, because you can look at it, you can deep dive, you can go into things, it'll tell you a lot of stuff, and then you can, decide what you want to do. If you have the time and you want to invest, but you can't be bothered to decide when to buy, when to sell, kab kya kare, all the rest of it, then FTM portfolios are the perfect product for you, because we create the portfolios out of the same signals that you see in InvestorAi. We make it available for you. You go to our site, one click, and you've bought the portfolio once a week or once a month. We will tell you to rebalance, one click, and you can rebalance. Okay, so it's the same content that comes, the signals that come to the portfolio or to InvestorAi, they just serve a different purpose. And both complement each other. So one does not exclude the other. Even if you're an investor who has the time and has the expertise, you may still want, to use the portfolios because they're just easier, and this happens. You could do both. Now, there is a third product we are working on, which is meant for people who have the expertise but are too busy and don't have time. And I'm not going to tell you any more about it other than say it's coming soon. Okay, it's a very cool product. It's a really fun little thing that we've come up with, but it's coming soon. And of course, if you don't have the time and don't have the expertise, you know what? Netflix is a better option. Don't invest. Okay. So with that, let me just stop sharing my screen. I'm going to now share my phone, and I'm going to show you InvestorAi, and then we will go through it. And then we will take questions. All right, so let me do that. Here is, okay. So when you open up, you will see the home page. This is your profile. None of these dials are clickable. That's just information for you. You will see what other people are looking at. You will have your watch list. On the watch list, red tile means there is a live signal, and gray tile means there isn't a live signal. Okay, you can watch demos and you can configure what you get to see. When you get to Ideas Corner, before you get to Ideas Corner, there is you'll see 4 squares on the top right. If you click on it, it takes you to Preferences. Under Preferences, you can choose your markets. I have chosen just India, and you can choose your sectors. And I have switched on all sectors in my case. Okay, so I will come back. So now if you come here, there are 3 algos you must be intimately familiar with. I'm not talking about the others because they are intended for international investors. So if you're not investing internationally, they won't have any meaning for you. So for instance, ETF investing gives you 372 UK ETFs and 1134 US ETFs. But of course, you're only investing in India, then it's of no interest to you. So I would urge you to look at value investing, which is top left. I would ask you to look at Alpha 330, which is the second row in the left. And I would ask you to look at swing trades, which is on the right. So let me start with value investing. So value investing will automatically show you ideas based on your sector selections and based on your country market selections. So let me just take the first one, which I think is Excite India Industries. And what this is telling me that this signal is very, very recent. It was generated on 13th of August, basically yesterday. And it has picked up Excite Industries as an undervalued stock. How do you know it's undervalued? So you can see this little bell curve chart here, and there is a dotted line. Anything to the left of the dotted line is undervalued, and anything to the right is not. The dotted line basically is the 20th percentile of the 10-year history of the stock, and Excite Industries is trading at 11th percentile. So it is definitely undervalued. And this shows you how the relative valuation has moved. The second square on the top is very, very important. So it may be an undervalued company, but is it a good company? Okay, so this is what tells you. So here we take every company and we compare it against the sector and we give it a rank. And this rank is number 57. So it is ahead of 57% of its peers, which is not bad, not great, but not bad. And these are the factors used to determine the rank. And as you can see, it's pretty good on every factor except future outlook, which doesn't score well. If you want to know more and you want to do more research, you see the live info button at the bottom. You can go in there and it takes you to Google Finance and you can read all recent news about the company. Okay? And you're still in the app, so you can just go back quite easily. And so this is the second section. Wherever you see a question mark, if you click on it, it will show you an explanation of what it is that you're seeing on the page. Then the last thing here is backtesting, which shows you this has happened 4 times in the last 2 years. And if you'd bought every time, you would not have made money in 1 month, you would have made money in 3 months, 4.5%. Okay. So, and of course, anytime you want to buy, there is the shopping cart button at the bottom left. You can click on that and it will take you to a gateway where you can pick your brokerage account. So we are connected to these 9 brokers, and then you can select any of them and put through your trade very, very easily. Okay. So this is value investing. There are a lot of signals in value investing. You can sort them, you can filter them, etc., whatever it is you want. The second one I want to show you is Alpha 330. Now, many of you will be familiar with Alpha 330 is a very, very high productivity algo. Okay. As you can see, you can keep seeing more and keep showing you more and more. And this is just India. Okay, not even other countries. The red tiles means that the signal is active. The white tiles mean, or the signal is strong. And the white tiles mean that the signal is not so strong. So let me just take the first one, which is Maharashtra Seamless Limited. And this is a very recent signal. It came on the 13th of August and returns since that date are 0, obviously, because it came up yesterday. And it's got 30 days to go. So every signal on Alpha 330, we keep open for 30 days. Every signal on value investing, we keep open for 90 days because it takes a little time, a little longer for the signal to play out for value investing. So you can see this. It shows a very interesting thing. You can see similar stocks. So if you like this company, there are 4 or 5 other companies that there is a live signal. And you can see all of them. And as you can see, some of them have done really well, like Jindal Stainless and Hindalco. And some of them have not done well, Nalco, India Cement, Supreme Industries. So, so it gives you all the information. And remember, we are not telling you to go buy. We never give you advice. That's just not our thing. We just show you what is happening. We'll tell you what the machine is saying. We'll tell you what the predictions look like. And then it's up to you to do a little bit of research and satisfy yourself that this is a good thing to buy. So this is Alpha 330. Very quickly, let me go to swing trades. This is an algo that is only available in India at the moment. And the moment you log in, it says it covers 126 stocks. But today, as of today, there are only 2 insights available. You can click on view. Now, you can click on closed ideas at any time, but there's no point because they're all over. But if you look at open ideas, there are 2 long ideas, because here we will show you a short idea as well. So one is Arvindo Pharma, and the other is Z Entertainment. And then these are 3-day signals. So each signal, it will tell you what was the date it was generated and what is the expiry of this signal. So, so please, and again, there's a question mark, so you can just click on it and then it shows you what this page is showing. So this is swing trades. I want to go into play because I spoke about it a little bit earlier. So here, play is really used to compare one company with many things, including the index. So let me just take, let us take banks. So if I take HDFC Bank, okay. Now what it is doing, it is comparing HDFC to the Indian market. The way it does that, it takes 6 criteria: drawdown, capital structure, consensus view, as you can see here. Okay. If you want to know what they mean, just click on the question mark and it will explain these terms to you. Now, what it does, it takes the market and takes the stock and it plots it on a 0 to 20, gives it a 0 to 20 score where 20 is best. So you can see the actual score. Now, consensus view for HDFC is much better than market. Their drawdown, which is the volatility, is better than market, and all other criteria, it is not as good as market. And the same thing is represented by the picture here because it becomes a very easy visual comparison. So you can compare it to banks, and if you see the FS banks over here, if I compare it to banks by clicking on it, it has a very different comparison. The way to understand this is that consensus view, that means analysts like HDFC Bank, much better than average of all banks. But on valuation, HDFC Bank scores much worse, which means it's a much more expensive stock. Okay. On future outlook, it is better than market. Historical performance, not so good as market. Drawdown, slightly better. Capital structure, about okay, equal. So this is again a very interesting comparison. So if you're evaluating buying Yes Bank versus HDFC Bank, you can then say, I want to compare it HDFC with Yes Bank. So now you go to competitor name at the bottom and you say Yes Bank. And now you can see a comparison of HDFC Bank and Yes Bank. Now, Yes Bank is worse than HDFC on everything except valuation because it is cheaper stock. So if I had a choice to buy either Yes Bank or HDFC Bank, this picture is clearly telling me that HDFC Bank is a better stock than Yes Bank. So, this is not a perfect view, but this is a very easy comparison between two companies. And I would really encourage you, all of you, to use play as much as you can just to understand what is going on. I could say, okay, Yes Bank is not my target. I want to compare it to Axis Bank. And now if you compare it to Axis Bank, now you can see Axis is actually a lot better than HDFC on many criteria. Analyst view, very similar. It's a little more volatile, so it doesn't do so well on drawdown, but historic performance, future outlook, and valuation, this looks like a much better stock. So if I wanted a large cap stock of one of the bigger Indian private banks, this picture would sort of tell me that maybe looking at Axis Bank is a much better idea than looking at HDFC Bank. So look, you can come to your own conclusions. The data is all here. Our task is to give you the information, give you the data, and let you decide. And the reason I went through this comparison in a bit more detail is so that you understand how play itself can be an incredibly powerful way, to do this. And of course, the moment you see this, you can always buy it. The last thing I want to show you is active monitoring. You'll see this monitor button at the bottom. You click on that. You can monitor any stock in the world. Okay, so now let's say Axis Bank. Let us just take Axis, because since we are working on it. So I can set my own profit and loss alert limits. I can say, okay, set limit now. So my default limit is a profit alert of 3% and a loss alert of 0.5%. Now, the current price for Axis is 759. So I can say, okay, fine, that makes sense. So I'll leave it how it is. Okay, so just leave it. And now Axis should be in my monitored list. So as you can see, my watch list, I can see Axis Bank started monitoring on 14th of August. Now I can click on this. Now it will show me very interesting things. It shows me the price. It shows me price performance against the index. And, sometimes good, sometimes not so good. It shows you the multi-factor rank, how it has moved. So it's pretty good. These are my limits. And then it will show me any live insights, if there are, and there aren't any. And past, now it currently, this past insight period is only 3 months. We are expanding it to 12 months. So very soon, the machine will go back 12 months. But the very interesting thing it does, it shows me that there is a similar stock that because you are monitoring Axis Bank, you may be interested in an active insight on a similar stock here. And again, it shows me comparison of Axis. Now it shows me Karnataka Bank. So I can click on this. Okay, show me Karnataka Bank. And now this also looks like a very interesting thing, because is it undervalued? Yes, because it's showing on the 12th percentile. Is it a good company? 72nd percentile is very, very good. So the Karnataka Bank scores very highly. Not so great on future outlook, but it is at a good price, 72nd percentile, and back testing is giving me 10% return, which is not bad at all for 90 days. So I have just, because I started with HDFC, then I compared it to Axis. I said, no, Axis looks like a better bet. And because I started monitoring Axis, I got shown Karnataka Bank. Okay, so this is the flow you can use. And this is very, very useful and very important, that all these things, InvestorAi is there for you to use. It's really a question of how you want to use it. And I wanted to show you this little sideways journey, because this allows you to discover things organically in a very interesting way. Okay, so I'm going to stop here. And I can see there are lots of questions in the chat that have been going back and forth. And I would love to answer them. So
great. Thanks, Akshay. Before we get to the questions, 2 comments coming in from our subscribers, and we have many new people, and it would be great for them to know how we all function as a community. So I'm going to read what Uday Kumar has to say. He is talking about our products, and he says, honestly, I believe in you guys, and it's a fantastic product. So thank you there. And Kunal Garg, he's very active with us in our community, and is always sort of taking up for us. So Kunal says, the transparency your team carries is awesome. That's one thing giving us the confidence on the team. Other reason is the ever evolving AI. I think he's kind of got the reasons why he should be using these products. So.
Kunal, you're a very well-known name, so nobody needs to introduce you. I read all your posts and stuff like that. Your point about, thank you for your point about transparency. I'm glad to hear that. The reason why what you just said is so important to me is because, see, we can't control the markets. जो होगा होगा यार अभी ऊपर जाएगा नीचे जाएगा I cannot control that. I can only control 2 things. One is to give you the best possible output that I can, and secondly to be as transparent about it. if it's not doing well, it is not doing well. It is there for you to see. We do not hide anything. And so all we are trying to do is to give you all the tooling and all the signals, but your judgment and your experience are what make the difference. Okay. So what you say is very, very important. And I just want you to highlight that for everybody. And thank you for that.
Great. Ajay has a question, and we also had another question from Zahid when you were showing us value investing, Akshay. So the question was, how long do you suggest we hold on to stocks in value investing? And I think Zahid's question was even understanding what is sort of long term for us, when we talk about value stocks.
Some of you have seen me present a slide on Warren Buffett. It's a quote from Warren Buffett, where he says, where we find a great company with great management, our hold period is forever. Okay, now, I don't agree with that quote, but I think it is a very important point of view that we must not ignore. Because what he's saying is that once I like something, I like a stock, and I know it is being well managed, then I don't really have a hold period. I'll keep holding on as long as these two conditions hold. So, we are just showing you as a 90-day signal. But that doesn't mean the company is only good for 90 days. It is good for a very long time. If you believe in the company, if you believe that this is fundamentally a good company with good management, why would you not continue to hold on? So the way I think of my portfolio is I have some hold stocks, which I don't want to sell. There's a company called Palantir, which I like very much. So I bought it when it came out on IPO, and I have not sold it. I've just kept on. It's good. It's done well. But I really believe it's a good company. I feel the same way about Airbnb. I feel the same way about Apple and stuff. And there are some companies I don't feel that way about. And for me, that is the trading portfolio. You go in and out. That's what I do. If that makes sense to you, then you can do the same.
Because you mentioned IPO, we have a question from MS that says, do you reckon the big money has already been made, or is the smart money exciting considering the IPO rush and PE exits? So he says, do you reckon the big money has already been made? That's his question.
MS, who knows? Who knows? If you could argue that the big money in Uber was made when Uber was a private company. You could argue that the big money in Flipkart, of course, never went public, but big money was made when the PE investing was coming. And so you're right to observe that, because PE money comes at huge valuations. And some of these companies have become unicorns just on the back of PE money. They've never turned a profit. So I don't know if there is any answer to your question. All I will say, if the Sensex has delivered 17% every year for 40 years, a lot of people have made a lot of money in between. But the logic of a long-term investor, where you benefit from compounding, where you benefit from stock selection, where you benefit from building a long-term portfolio, does not go away. Now, on the side, there may be some big money in big companies that are never going to make money after that. That is also a valid point. So, hard to say. I would say, if your view is a long-term view and you believe in the Indian economy and you believe what is going on, then selecting good companies and investing in them makes a lot of sense, whether or not somebody else in the past has made big money. That would be my view.
I think there's a continuation to that one. I think what Ajay is asking, Pratik is asking us, so how much percentage of our monthly income should be invested in the stock market for long term, if we're holding on?
Pratik, as much as it's up to you to decide how much you can afford. It's a question of your lifestyle. It's a question of your income, how much money you make and how much money you spend. But taking some of your savings and putting them in investments is not a bad thing. Doing it in a disciplined manner is an even better thing. And starting as soon as you can is probably the best thing. So I would say what you decide what your lifestyle needs. Keep a little cushion for emergencies and invest the rest.
One on Play, specifically when you were showing Play, Sachin asks, I think peer-to-peer comparison should be a default feature instead of a peer search.
I'm not exactly sure what you're saying. So you're saying, let me paraphrase what I think you're saying. What you're probably saying is that you should not have to search for peers. The peer comparison should be available. Well, it is available. So there are three options on Play. The first play is the index, the market. The second option is the sector. And sector is nothing but a peer-by-peer comparison. So when I compared HDFC Bank to the banking sector in India, it showed a comparison of HDFC Bank with all the peers. Now, HDFC will have many peers. You may want, if you want to compare it to a specific peer, that's a different comparison. And that is why we've given a custom option where you say compare against competitor. Now, you don't have to compare against competitor. You can compare HDFC Bank to Tesla. Nothing's stopping you from doing that. So it gives you a lot of fun things to be able to do. I don't know. I don't know if I've answered your question.
No, you answered it. That's exactly what he asked. He just came back on chat and said, you got that. You got that right. So, okay. Yeah. Thank you, Sachin. I think Harsh has a question. The question is, why does our app not show all the shares listed on NSE?
Because we need a certain level of information, including analyst coverage, in order for all the data elements to be available for our algos. For some of the really small micro-cap kind of companies, that kind of coverage is not available. It's not just an India thing, all over the world. So we have a market cap cutoff. I think it's $500 million. Sarthak, correct me if I'm wrong. For India, but we have a cutoff of market cap and we only cover stocks above that.
No, you're spot on, Akshay. That's the only reason why we do not add. But by the way, we keep revising universe. If you really look, the number of companies we started with and the number of companies now is chalk and cheese, and you keep adding a lot more. Every quarter we review.
Great, thanks, Sarthak. Piyush asks, what is the accuracy percentage of our algorithms in the real world scenario?
Sarthak, you want to take that or should I?
Yeah, I mean, look, let me just answer that. Yeah, so we report accuracy every day. As a matter of fact, for the people who have been with us since the beginning, they can testify for us. Look, having said that, you cannot always have the same accuracy, but in average, we were around 70-75%. India is still running at 70-75%. We have actually fallen a little bit in the US markets, but we are again working really hard towards fixing that. So roundabout, it should be in the range of 68 to 75. Yeah.
So just to add to what Sarthak said, today what you see on the accuracy button when you click on it is a combination of all our signals from that algo in all markets. And I know that is confusing because if India is doing well and US is lower accuracy, it just averages out. And then if US goes up and India comes down, that also averages out, and that's confusing for people. So we are working on a different thing where we will be able to show you accuracy only for the markets that you have selected. So in your preferences, if you select India only, then you'll only see accuracy, etc. for India. You won't see other countries. That is a piece of work that we have to do. In the next few weeks, you should expect that to be available. So that will make it clearer for everybody and of course, more transparent.
By the way, just to add, just to give you some numbers, as of July 31st, we had closed 103 insights, and the average was around 7.5. That's for India. So we've done really well.
Accuracy for India?
I was around 82, I suppose, till July 31st. We'll have to look at this number again.
Okay, Nikhil asks, for someone with no expertise and no time, in my view, there could be a product on mutual funds to understand. Sorry, give me a second. It's just come in. So, yeah, to understand the performance, attribution, and ratio analysis.
Look, if you want to understand performance attribution, performance analysis, and ratio analysis, I think, maybe doing a course may be a better idea. Then we won't, we are not the place for that. Secondly, we don't cover mutual funds at the moment. And, we actually do, but only for enterprise customers. I am not in favor of adding mutual funds as an asset class. And I would actually love to hear from everybody what you think. I think the amount of fees mutual funds charge is a big drag on performance. Okay. The reason the ETF industry is now trillions of dollars is because mutual funds are so expensive. And they don't actually produce any better returns for active management. They just charge you very high fees. I'm fundamentally against this whole high fee charging thing. So, so mutual funds for me are least priority. And we may bring them into the app at some stage, but don't hold your breath. It's not happening in the near future. There are so many mutual fund apps and stuff that you can get, Nikhil. So I would urge you to, if you're interested in mutual funds, then you should really be looking at. But also, if you look, you should look at ETFs as well, because ETFs will give you the same diversification without the same cost. So why would you not look at ETFs versus mutual funds? That is one. The other thing is our FTM portfolios. They don't have as much variety as ETF or a mutual fund, but they will. This is just the start. We've got 2 portfolios at the start. We're working on a whole range of them. We will be adding more portfolios over time. And I believe that our FTM portfolios are an even lower cost option than ETFs. Because it's a fixed cost. And then if you put 5 lakhs, 10 lakhs or something, the cost becomes insignificant. And ETF is a variable cost. So the more you invest, the more you pay. I think the whole logic of, variable cost is fundamentally unfair. The fund manager does not do more work if he's managing 200 crores versus 2,000 crores. Our FTM portfolio does not do more work because it is, you're investing more money versus less money. So I am, as you can tell, I'm fundamentally against variable cost pricing. And that is why I don't like mutual funds, because they charge, there is a large cost over there that I feel is not, should not be there.
Okay, Akshay, we are at 1:20, so I'm just conscious of time. But however, we've got a few questions that have come in specifically for FTM and rebalancing. And if they're a subscriber, can they join the premium WhatsApp group that we have for subscribers only? And a lot of discussions happen there. We will actually come back to you on all of this. I just want to close out on 1 or 2 things. People have asked whether this video will be available. Yes, it will be sent to you on your registered email ID. It will also be available on YouTube, on our InvestorAi YouTube channel. And the third thing is that a lot of you, the last 2 weeks, we have our free plan that some of you are on, and you came back and asked us if we would do discounts ever again for you to subscribe. So the thing is, we have a very special discount just till 12 midnight tomorrow. And the reason being, this is our 25th webinar. And thank you for being there, and we're excited. And of course, another really special reason, it's Independence Day tomorrow. And so for India, we have a special 15% discount. So everyone who has come back to us asking us, this is your time. You have from this very second till tomorrow 12 midnight. So make the most of it. Here on the screen are our numbers. And perhaps if you can go to the next slide, I just want to show you what the discount code is. But before that, if you could just tell us what you thought about the webinar today, that would be great. Please come back again. And here is your discount code, which is on the slide here. And hope to see you next week, same time. You can reach us on our on support@bridgeweave.com or on any of our social media channels. We're on all of them. So thank you so much. And all FTM questions, we will come back to each of you. You will get an email from us on that. So thank you everyone from the InvestorAi Academy, and see you next week, same time, same place. Bye. See you.
Thank you.